Joining us now to discuss is Simeon Hyman, Global Investment Strategist at ProShares. Hello there, Simeon. What an exciting day. And I suppose maybe you could put it into perspective for us, the significance of this moment to the crypto community and the trials and tribulations of getting a Bitcoin ETF approved by the SEC.
Sure. We're really excited. We're excited to bring the first Bitcoin linked ETF to market. This is a milestone in the ETF industry, just like the first bond ETF, the first gold ETF. So this is big news in ETF land, and of course, it's a real milestone of maturation and evolution of cryptocurrency and Bitcoin. We look forward to providing this opportunity to investors who haven't necessarily had the sort of wherewithal or gumption to be involved with wallets and exchanges and keys. So this is going to make it much easier for folks to incorporate into their regular brokerage account. And the trading that it will bring to the ecosystem should add a lot of additional liquidity to Bitcoin trading, and that's always a good thing.
Simeon, I just wonder, why is ProShares the first? Was it just good timing, a matter of developing special relationships with the SEC, a prior history, a track record?
We're always focused on innovation at ProShares, and I'm not privy to discussions with the SEC per se, but certainly we made our first filing for a Bitcoin ETF back in 2017. Innovation and R&D is part of our DNA, so this was certainly a natural outgrowth of what's core to us in terms of bringing out differentiated, innovative, and when we can, first to market ETFs.
All right. Well, you have first mover advantage, which certainly, at least in Canada, has proved to be an advantage for the first mover out there. But Invesco was also set to have approval, perhaps, but they've dropped efforts to launch a Bitcoin futures ETF. Valkyrie is aiming to trade on Wednesday. Do you think you could sustain your first mover advantage, or what differentiates ProShares from the competition?
Well, we certainly think that not only are we first, but that we've brought a robust solution. This combination of the regulated futures market and the ETF instrument is a real belt and suspenders combination that isn't just convenient, but also effective and robust. And that's a solution that we think will be of value to investors for quite some time. If for kind of a proof point on this, we actually launched the analogous mutual fund, ticker BTCFX, back in July. And the mutual fund, it's just been out 3 months, but in that time period through last Friday, the Bitcoin reference rate, that's the rate that amalgamates several exchange prices, had been up 51%. And the mutual fund using the similar futures strategy was up 52%. For comparison, GBTC, the Grayscale Trust, was up 37%. So we're happy to be first, but we also think we've done it right. And we think our track record of delivering innovative solutions and just the short look at how the mutual fund has delivered on on its intended outcome, we think bodes well for its prospects.
Okay, so I see you have a track record with the mutual funds. Why was the SEC receptive to Bitcoin futures as an ETF versus, say, a physical Bitcoin ETF? Have you filed for a physical Bitcoin ETF? Is that something on the horizon? And again, if you could tell me, why is the SEC more receptive to a Bitcoin futures ETF first?
Yeah, I mean, the SEC has been public, so you don't have to wonder what they're saying to us, because the SEC has been quite public in advocating for the benefits of a futures-based exposure to Bitcoin. It is that regulated environment. The fact that the CFTC is there's a clearinghouse, it's going to settle, much harder to manipulate prices. That's been a real consistent message from the SEC, and of course, it's consistent with what we see as the benefits of a future-based strategy. So they've been very public about it, and we certainly see the same benefits.
But aren't Bitcoin futures ETFs, if linked to Bitcoin, are exposed to the same market forces that could be up for market manipulation?
So two separate pieces. The manipulation piece is quite well regulated in the futures market, but indeed the ETF is designed to properly represent the behavior of Bitcoin in all its sort of, play it as it lies natural state. In other words, there's if it's going to perform in a volatile manner, then that indeed is how the ETF will perform. But what I would suggest is that volatility in and of itself is perhaps a feature, not a bug, because that's where you get the diversification elements. Now that this can go into a regular brokerage account, investors can incorporate it into their asset allocations, and it's harder and harder to find anything that doesn't sort of behave the same way every day. And that means that in its appropriate modest allocation, doing something different than stocks and bonds, it can really be a beneficial portion of a portfolio. But that volatility will speak through the ETF.
Right. So it's more regulated, but investors are certainly paying a premium for that. Let me bring up this tweet from Charlie Morris, the founder of data firm BITO, tweeting Bitcoin futures ETFs launch day. Roll yield has spiked to 17%, which means investors underperform BTC by 17% on an annualized basis. Is there concern over that premium?
If we put a little more context around this, because it's certainly an exciting day given our launch, and that means some interesting things are happening just because of the additional volume from the launch. But if you look at the month of September as a snapshot, the average premium of the next month out contract to the near month contract, so that's the thing that you would roll to, was 20 basis points a day, and that would annualize to a 2.5% annualized roll cost. And so, look, we don't know what the future will hold, but one other thing that's also important to note is indeed that the more participants are in the market, the more liquidity is there, the more there are arbitrageurs looking to short, say, the ETF. That's very likely to bring down those kinds of costs over time. And we certainly put forth that, a 2.5% annualized roll cost, that compares, I would suggest, reasonably favorable with any other way that you might want to access Bitcoin. Remember, you can't even invest in that Bitcoin reference rate. You can't just invest in the thing in the corner of the screen. There are multiple exchanges, so there's some costs in all ways. But we do think that if you look at that month of September as an example, the costs are quite modest and indeed compare favorably to other ways that people will get exposure.
All right. And Simeon, I'm just curious, do you personally own Bitcoin or one whole Bitcoin? Have you been a follower of Bitcoin for a while?
I've been a follower for a while, so I have to keep my personal investments close to the vest for the purposes of public disclosure.
Do you follow the philosophy, or is that something that you are intrigued by, or at all? Is that a reason why you were interested in Bitcoin?
So that's a great question, and I think to frame it for everybody who's listening to this conversation, and thank you for the opportunity, there are two parts going on here. There is the investment piece, and then there are the underlying use cases. And as an investor, you imagine you were investing in gold. You were putting gold in your portfolio. You wouldn't have to really necessarily know, whether you wanted to make jewelry with it or whether you were some sort of metallurgist or had an industrial application. So as an investor, you don't necessarily have to be completely attuned to its use in DeFi or the anonymity of the transactional process or exactly, how many coins a miner is getting. So there is the ability to invest without having to completely roll up your sleeves. That said, it is absolutely true that those underlying use cases are part of the long-term value proposition. And to be non-technical about it, it is pretty cool. I mean, this is cutting-edge 21st century stuff that it will in all likelihood have a really permanently changed the investing and the financial landscape. And so that is certainly a compelling thing to keep an eye on. But you know what? You don't have to quite keep an eye on that piece every day to have it be an important part of your portfolio. So
would you say it's still better to own some Bitcoin rather than a Bitcoin futures ETF?
Well, as I said, the futures, in fact, we think are, if anything, a better place for price discovery. The regulatory aspect and the ETF wrapper make it a very compelling alternative. Certainly, there are going to be plenty of folks who will invest in Bitcoin directly. And, if they were investing in Bitcoin directly yesterday, I'm not sure they're going to be the first people to invest in the ETF, but there are a ton of people who were waiting for this opportunity, both buy and hold investors and the trading community. Both of those constituencies are really important. If you're going to buy Bitcoin and you're going to hold it for 3, 6, 9, 12, 24 months, you're still going to buy it one day, and you want those traders there to make sure that it's trading efficiently. And you're going to sell it one day, and you want those traders there to make it trade efficiently. So both of those communities, we think, will find important use cases for the ETF, making it a robust alternative that
Simeon,
we think will
just one last question before we close it out. I want to know, what's looking ahead. Is a ETH futures ETF next, another altcoin futures ETF, or perhaps a Bitcoin spot?
Yeah, we're not going to, sit back on and rest on laurels here. Innovation is critical to us. We are watching the maturation and evolution of the Bitcoin market, the cryptocurrency market, always looking to see what opportunities may be there in other currencies and the evolution of the regulatory environment. So when other opportunities do avail themselves, we will always be looking to bring new solutions and important, valuable solutions to investors.